It has tended to be overplayed in the financial markets. When we think about the size of tariffs, let's say there's another round of tariffs put on Chinese goods. It's said to be around 200 billion of products. If the total size of the tariffs might be in the 300 billion or so range, what is the size of the global economy? 100 trillion. And this is a one-time hit on prices. So over a few years, it's several hundred trillion of economic activity. One last point, in the U.S. economy, there's 150 million people employed. 85% of them are in the service sector. When we speak to tariffs, we're speaking to the idea of the goods sector being influenced, the smaller portion of the economy. So to that extent, it's been overplayed, overhyped, and not affected either the equity markets or the credit markets or even the U.S. bond market very much on the whole.
Mona, how nervous, if at all, should a U.S. equity investor be about what's happening in Argentina or Turkey or now Indonesia?
Yeah, generally speaking, I think what we've seen is that the U.S. dollar strengthening has caused some grief for that region of the world. And really what we're looking at is those economies with higher current account deficits are the ones most at risk here. And we do see as the relative economic strength, as the relative interest rate strength, as the relative potentially inflationary strength in the U.S. continues, the dollar may have legs going into the second half of the year. So we continue to monitor those EM economies and watch that strengthening dollar and how that might impact.
So do you stay away from the industrial conglomerates or the consumer giants that have a lot of business abroad because their earnings get hit with that strong dollar? Or is this a broader warning signal for the overall market now at record highs?
Yeah, generally speaking, I think we continue to see strength in the U.S. economy, and that the global sector, even in the U.S., continues to do well. There are pockets of weakness in EM, and I think even there you have to be selective. There are economies that may continue to do well depending on their current account deficits, their exposure to oil, et cetera. And similarly in the U.S., there's global sectors that can continue to do well. What we do see playing out, though, is that this year the U.S. economy remains robust. We think versus the global economy, there is a bit of divergence there.